What is going on, beautiful people of the internets? I wanted to take a quick moment and share my thoughts around this madness around Wall Street bets and what this means for crypto, and also why I stopped trading equities and started trading cryptos. Hi, this is Brandon with Crypto Trades and Tech, and let's dive right in. I'm sure most of you are very well aware of what's been going on here with GameStop and AMC. And we see that obviously GameStop's pumped crazy. This has created a lot of political backlash as Robinhood stopped traders from being able to trade this name. Just a lot of craziness going on. Now, I don't want to get into the politics, but politics aside, there's some obvious issues with how Wall Street works today. And, there's some friction there between Wall Street and Main Street and maybe justified. But, there's a reason I quit trading equities and I started trading crypto and Forex, mainly things that trade 24/7. But what I want to do is let's start by talking about what the impact of this could be for crypto. Well, as people get more and more frustrated with the issues going on in the markets and the manipulation that really does happen in the markets, obviously I think this could be a big boon for crypto. Obviously the kids have moved over to Dogecoin right now and they're pumping it up. And frankly, I should probably start paying attention to Doge on my charts because, the network effect, what gives these projects value is the people behind them. And frankly, whether I agree that Dogecoin is a significant, payment system or not, there's enough people that know the name now. It's going to make enough news that this is probably something I should be watching closer. So I will be at least watching it a little bit closer. But besides that, obviously we've got some serious price pumpage going on here on Dogecoin right now. The thing is, that people ask me, are you in GameStop? Are you trading GameStop? Are you trading AMC? Are you trading Doge? No, I'm not, because I don't have a clear system to take advantage of these type of moves. I don't have a way to predict that this is going to happen. I don't have a way to predict that it's sustainable, and I don't have a way to predict when I should get out. I have a system that helps me know when to get in, how to manage, and when to get out of other instruments. And so I can consistently pull profits out of the market that way. So I personally, I don't feel the need to go gambling any further than, I'm already trading crypto, which is already insane. I did want to share one big piece of news. I just saw this. Somebody on our SM Blade in our CTM community chat posted this, that there's a Cardano registration. So Cardano, a Grayscale Cardano Trust registered in Delaware. So this could be a big deal. I don't know. I have to dig in more. I just saw this. I do know that other trusts have already, in the past, Bitwise at one point had added Cardano to their ETF in the mix. So, I don't know if this is going to be a dedicated Grayscale trust just for Cardano or what. I think they're registering a bunch right now. They're working on a lot of different ones from what I understand. But I don't have any insight into that just yet. I just wanted to share the news there. And I just wanted to put the disclaimer out there as well that this is not financial advice. Anything you hear here is just my opinion, my observation of what's going on in the markets. And if you listen to me, you'll certainly lose 1,000% of your money because I'm an idiot, and you'll end up living in a van down by the river. Now that said, I wanted to talk also why I switched from trading crypto to trading Forex, and I switched from trading equities, to trading crypto and Forex. And now that's not to say that I don't hold some equities, because I still hold several equities. But let me just show you something real fast. This is an equity I bought the dip on with this is Qualcomm, very strong stock. I bought the dip on with the news of Apple dropping them a while back. It was probably 2016 or something, a while back here. But take a look at this chart. This is the daily chart of Qualcomm, and look, this is a large traded stock. Look at these gaps. That is insane. The problem I have with trading equities is the time frame that I trade. I don't have the bandwidth to day trade. And I don't have the desire to do so either. I prefer, multi-day swing trading or longer time frame swing trading. A couple days, couple weeks, couple months, depending on how long I can keep pushing that trade. I'll push the trade as long as it'll keep allowing me to push it. But with our CTM system, we've got a really good system of getting in, but risk management is so important to any trading system. So if I were to trade this, say I entered a trade, I saw this big gap up, whatever, I saw this big momentum, And a trade entry for me might have been somewhere over here where I saw this breakout of this key level somewhere in here and a retest and a resumption of that level. So say I entered a trade right in through here, right? And now most likely I would have got stopped out of that trade, but say I entered a trade here. Like this is my trade entry. All right, so the way I would manage this trade is that when the price were to move up, I would move my stop loss up accordingly or maybe take profit. But say I had a trade on from earlier, right? So for example, maybe a better example would be if I'd started a trade over here somewhere. I had entered a trade as this price was resuming off here, right? So I had my entry was maybe even right here. And then it gapped up, things were looking great. I managed a trade, I moved my stop loss up. So at some point, my stop loss, I'm gonna change colors. All right, I took a minute to analyze this chart, and I figured out here's an example of where I might have placed an entry right here. So say this on this chart, it's at 63.55, right? I'm trading this, and I get a nice move up, I get this nice impulse up, and so in order to manage my trade, maybe I didn't move maybe I kept my stop loss. My stop loss probably would be down here somewhere, right? So say my stop loss was there, and my trade is now nicely in profit. And maybe I move my stop loss up to, right under break even, or say I move it up to break even. So I moved the entry criteria around just a little bit more to show you. So say I entered here, I'm gonna make this green. Set my stop loss initially down here. And as the trade looked like it was progressing, as we get up into these areas, the way that I manage my trade is that I move my stop loss up. When I see the next entry, tells me that's the time for me to move my stop loss up to break even, because I'm not going to get wicked out. I'm not going to get taken out on a big wick down. This is especially true in crypto, but in any instrument, right? You can have a big, quick wick down and then the recovery. I don't like getting stopped out on those, so I'm kind of cautious when I move my stop loss up. I move my stop loss when I see a second entry criteria trigger. That's my trigger to move my stop loss up to break even or slightly profit. So I would have probably put this one right above break even for a slight profit. But say I didn't take profit. Say I wanted to push this trade, right? And I see this price action playing out, and I'm just letting. And now I've drawn for you my stop loss, right? So I entered the trade here where this green line is. Good entry. I was in profit. I didn't take profit because I wanted to push the trade, because there's a chance this momentum. Look at this uptrend that we're in here. It's looking good. We might keep going up, and I don't want to take trade coming back into that trend line. I don't take profit coming back into that trend line. I want to see if we resume off and keep pushing that trade, right? That's the way that you do good in the market. You keep pushing trades. But I know that I have, at no worse am I going to leave here at break even. So I want to push this trade since it's basically a free trade on right now. So say I wanted to keep pushing this trade, and then over hours, some bad news comes out that I never have predicted. There's no way I could have predicted this. And so say I was managing this trade like I should have, and here I am. It was in profit nicely up here, but I wanted to keep pushing this trade because maybe I just quickly do this trend line here. Maybe I wanted to see how price reacted on this trend line to see if it would bounce off this trend line and resume up, right? So I didn't want to take profit coming into this trend line. I want to see if that trend line holds its support and we resume up. So I've got my stop loss in place to protect me. If we lose that trend line and we lose this support level here, then I know that once I hit this, it's probably coming down further. But that's where I want to be tripped out. But I don't want to take profit because I want to keep pushing this trade. Well, if some bad news comes out after hours here, and you see this big, huge gap, and then I get gapped down, and my stop loss doesn't get triggered. So my stop loss fails, doesn't ever get triggered, and I have to reopen a new one down here. It kind of depends on how you set that, but in theory, hopefully you would get your stop loss as soon as market opened, wherever it was down here, you would actually get your stop loss filled. But that can be a portfolio killer. That can be a crusher, having to hold, take a huge loss when you had a winning trade, you had it managed properly, and had the market gone against you, you would have gotten stopped out at slight profit or break even. Or, you could also have taken a much bigger loss than you had intended. Maybe you never moved your stop loss and ended up taking a bigger loss, whatever. But these gaps can be killers. It makes risk management so difficult. But I can go look at any number of look at Nikolai, which is, obviously was a very volatile stock, had this huge spike up, then some bad news and these huge gap downs. These gaps that just are pervasive across so many equities. These are risk management killers. I can't manage risk well around these big gaps. Enter crypto. There are no gaps. It's a seamless 24/7 trading instrument. I can set my price levels wherever they make sense, and I don't have to ever worry about being gapped on and having to deal with that. So this is one reason I moved away from trading equities to begin with. And so this whole Wall Street movement, I think WallStreetBets movement, it's just really highlighting some of the problems as well. And what I've seen happen, and I don't know that it's totally true, but I feels to me like the market only being open a few hours and then being closed allows for more manipulation. I don't know if that's true or not. I haven't done any scientific research on the topic, but that's just what I feel like happens. I did want to touch on one more topic. I did put out there that what I did yesterday when I saw that we were coming back in these levels right here, when we made this double bottom, when it looked like we might be having some momentum to the downside, when we came back in to test here and we're coming back down, my concern was, based on last cycle, what we saw happen is that after the rotation phase that we talk about in our altcoin cycle phases, after that rotation phase had ended, when the money was rotating from Bitcoin to altcoins, there was a time when Ethereum, namely, stagnated, and it slowly lost momentum versus Bitcoin, and it didn't regain into that FOMO phase until Bitcoin made the next leg up. Then Ethereum really started to moon. So given the large moves that the moderate moves for alt season, these are not huge moves, but for the relatively big moves that we've had in some of these altcoins since we started breaking out and having that alt season early phases, what I wanted to do yesterday is I wanted to de-risk my position. So taking a look at the Bitcoin dominance chart, right? Another way of looking at this is we were coming into this resistance here on this trend line. Had we broken up and made a leg up, what I wanted to do yesterday, I didn't want to get wicked out on a big wick above and then right back down. So for example, I'd eaten a stop loss right here on Cardano, and I had to re-enter that trade later, obviously when we got a resumption signal. So I didn't want that to happen again yesterday. So what I did is I actually took some about 20 to 30% off of. So I had trades on in ETH, Cardano, Link, and Polkadot. And what I did is, and these were all profitable. I had some of it didn't matter. They were in total profitable. Some I had more than one trade on, but nonetheless, I took a piece of my profitable trades off yesterday, right as looked like we were potentially coming down. So right through here. And what I did is, because I de-risked, I took my risk off, I had moved my stop loss up to very aggressive levels on all these names, like right under the support. So in order to de-risk from a wick down scenario, I went ahead and took some profit up here, because these are in profit stop losses. And because I had less of a position size on, I moved my stop back down. Now this is after having moved it up. So there's one thing I want to say is that, so say my initial entry was down here, right? And I'm managing my stop by moving this bottom line. We'll turn this into the green. We'll make this green for my entry position just to illustrate this. So if I see this big impulse up, right, I don't move my stop loss. I might have taken profit on a big impulse like this. But if I didn't, say I wanted to keep pushing the trade, which in a lot of cases I did, as it came back into support here on that resumption signal will be right about here, I would move this stop loss up to where I would have placed my stop loss on this second higher entry, right? And then the same thing again here. When I got a resumption signal over here, which we just got, I would then move my stop loss up here again. So that's what I had done. I think we got technically a resumption signal on a couple of these through here somewhere. So I had already moved my stop loss up on all these names. I'm just looking at Polkadot right now specifically. So I had moved my stop loss up here pretty tight, expecting some resumption. As we're coming back down into that, what I didn't want to happen is what happened with ADA, and where I got this big wick down right here. My stop loss was literally right there, and I mean it never actually hit my price. It was just close enough to my price that it triggered my stop loss. Which and we talk about, I've talked about a lot of good trades I've made, but then this was a mistake, right? There's a pretty big chunk of a move that I got stopped out, and so that cost me a lot of profit. So I didn't want to eat any more stops like that on a big wick down. So again, what I did is I de-risked. I took a little bit off, like specifically in this name, I took a little bit off of Cardano as we came into that trend line, as we came into that resistance right there. Let's go to the 4 hour and I'll show you. Right as we came back into this and we're coming back down, when I got this is a very low time frame, but in this range right here, I was looking at this downtrend. When I got the confirmation signal, I need to change that to yellow. when I got the confirmation signal right here, so if I'm watching this as if it were a downtrend, I'm selling into a resistance, right? So I actually took a small bit of profit here, which allowed me to bring my stop loss back down here. Because what I didn't want to happen again was just for a quick wick down and back up to take me out of the position. So that's one small thing I've been having to do, and the reason I'm bringing this up is just because this is crypto specific, especially altcoin specific. Navigating around these big wick downs, having eaten this wick over here, this was my adaptation of trying to work around that. Now, I would never, again, this is not financial advice either, but I would never move my stop loss below my initial stop loss. So say my entry, I'm pretty sure the entry that we're talking about for this whole trade was actually right here originally, right? Something like that. The trade that I'm holding. So I had one trade on there, and I put another trade on here. The second trade is what got stopped out on this big wick down. So I had a second trade on somewhere in here, and that's actually what got stopped out, this giant wick down. But this other trade that I was holding, I didn't want it to get, it was nicely in profit. I didn't want it to get stopped out on a big wick down like that after I had already moved my stop loss up. So in order to de-risk the additional position I had on, I closed out of it, and then I was able to justify moving my stop loss back down here to give myself some breathing room for a big wick movement. So the other thing, in general, I won't ever move if I ever decide that I'm moving my stop loss to break even. I'm never going to move my stop loss back down from break even to a loss. I will just take the break even exit. The only time I ever do this type of moving the stop loss down is specifically in crypto when I'm in profit. And I don't want a trade that I'm trying to push to get stopped out on a wick down. If I see that potentially coming, I will move that down. I will accept less profit. This is still would have been a profitable trade where I moved it from here to here. Would still have been a profitable trade. I'm accepting less profit in order to de-risk my potential of getting wicked out. And so now it looks like so far we broke that trend line, and we're looking to resume off of here, another potential entry signal. So now, because I've taken a position off, I obviously got wicked out here, and then I've taken that piece off, so now I can re-enter. So I'm watching to re-enter. So it will cost me a little bit doing that too, right? So I initially exited here, or somewhere here, probably a little bit lower, and I'm going to have to re-enter maybe up here, or maybe I'll wait for a breakout of this 1086 level. I'll probably wait for that at this point since we came into it already. Maybe not. It depends on how far down we come. If we come down here and we get a resumption signal here with enough airspace between my entry, what will end up being my entry and this resistance, I might go ahead and do that, or I might wait for this. Nonetheless, that's not what matters. What matters is I'm just trying to show how I'm deciding to navigate around the potential big wick down areas, and re-clarifying a few things that I think I haven't clarified before, but this. And that is when I enter a position, if this is my entry right here, so say I entered my initial Cardano to Bitcoin position at, say right around 853 Satoshis. This big next impulse up, when that happens, I either will take profit depending on how I feel about the impulse and what's happening in the market. If I think that this is just a local top that we're going to be range bound for a while, I'll go ahead and I'll take profit into resistance, which I do a lot. I'll take profit at least some into resistance, like right here. But if I'm really wanting to push a trade, like right now, I'm more now that we're in the later stages of this early rotation, I'm more favoring pushing the trade because I know the FOMO phase is coming. So I've early on, I took some profits pretty aggressively into resistance because we had just started breaking out. I didn't know if this is going to be a false breakout, right? But now that it looks like we're consolidating, now I'm trying to push these trades. But nonetheless, what I'll do is in general, not always, I'll wait for the next resumption signal. When I get that next resumption signal, that's my signal to move my stop loss up to where it would have been had I taken a position here. I do all the same calculations, all right? And so now I have an in-profit trade that's far enough down below my entry point that I'm safe from being just a quick wick down and having to take less of a profit, and that way I can keep pushing my trades. Now this next entry, now I have a stop loss here that I had moved up to here. Now I've moved it back down to here. So what I will do on my next entry, so I will have multiple, and these are multiple smaller entries that I'm putting on these names, right? So my next smaller entry, say I do enter here. So maybe it's right about, I don't know. Let's just say I wait for a break of that, right? My next entry, when I actually enter a second entry, I will also concurrently move this stop loss up to the same stop loss that I'm going to use for that entry. So this trade, I keep pushing the profit on this trade as I enter new trades. And then the next entry after that, I'll move the stop loss up again, right? So I just keep laddering that stop loss up as I take more entries. But if the impulse is big enough, I'll show you an example of where the impulse was big enough that I took profit. I may have on this Cardano one. I don't think I did. So I'm pretty bullish on Cardano. I did take profit on a big impulse in Link, for example. Let's go find it. Yes, I took profit just one stage too early, but it ended up working out. So I had a really nice trade on Link where I had entered, I believe down here somewhere. Don't know exactly where it was. I might have even been down here. Yeah, that was it. So as we came back into the support level, I think I entered down here on Link, and I had a beautiful, nice, and then this huge impulse up. Now I took profit early. I took profit into here, but that was such a big impulse in a short period of time, relatively speaking, that I went ahead and took profit, and I think I've re-entered my position here. Nonetheless, so there are big impulse moves. I did it on 2 on DOT, right? I took a profit on DOT coming into here originally. Now, I originally wanted to take profit coming into this 58,897 level on Polkadot, but we never actually reached there, so I'm actually still holding that trade. I was waiting. I think my limit sell was actually like right at that level, like 58.8 even, and we never hit it, so I never sold. So I'm still holding that position, and this is one of those trades that I wanted to keep pushing as well. So this is one of the ones that I sold a piece so I could justify backing off my stop loss there. I took some profit, right? That's where we're at. Like this big. So if I had been, I wasn't in a trade down here, unfortunately. I wasn't smart enough to get in DOT that early. I think I first got into DOT. I may have entered a trade. I don't remember. I think I first got involved in DOT way back over here. That was my first entry. And then I took profit coming into this, a new entry here. I did not take profit on this entry into 58,897 because my order was for 58,800 and we never hit it. So I'm still holding that trade, but I'm also wanting to push that trade. Now that we never hit that, we're consolidating below it. This is a significant level. Go back here. This is the high from August. I don't know if I will take profit coming into this. I might just be aggressive with my stop loss, move it right below this line. But at this point, because we're consolidating below it, I might be tempted to push and see if I can't get above this for some price discovery. Likely what I'll do is I'll have more than one trade on, and I'll take profit on one of the 2 trades. There's another entry sitting up right now. So yeah, I'm going to have a second trade on. So right now I only have one trade on DOT, for example. That's in profit that I'm pushing. I'm going to keep, I'll probably take profit on that initial trade as we come into that level. Keep that sell order that I had. And the second position that I have on is the one I'll push to see if I can't push it above into price discovery. All right. Well, anyway, those are my thoughts for today. This video is getting to be a little bit longer than I want, but if you guys enjoy the content, please like and subscribe. I appreciate all the support, and take care.